All right. I'd like to call the Business and Governance Committee meeting to order. It's a couple minutes after 10. We have a long agenda today. Here's we have a quorum.
Yes, we have a quorum.
So why don't we start with non-agenda public comment?
No public comment.
No public comment, so we'll move on to the new business. Item A1, staff's recommendation to deny the appeal of Janet Hewlett. Susan Youngflush.
Thank you. Good morning. This is staff's recommendation to deny Ms. Hewlett's appeal for her 13th check overpayment interest. Ms. Hewlett is the continuance of a deceased city member. In 2015, we found two errors. The first error was a 10% increase in the member's final average salary, which resulted in a $38,000 overpayment. This was part of a group in which the city had corrected the error, so we did not seek this amount from Ms. Hewlett. She is not appealing this issue. The second error was a overpayment based on 13th check payments in which Ms. Hewlett had received $75 per year of creditable service as opposed to $30 per year. Ms. Hewlett is not appealing the principal, but she is appealing the interest. She is asking that the interest be abated or in the alternative that the interest be lowered. Her argument for abatement is based on financial hardship, first off. We considered financial hardship. However, the city has declined to pay for the overpayment interest, and thus we must seek it from Ms. Hewlett. Her second argument in regards to abatement is she points to a few of the 90% cap members in which the board recently abated interest on. However, the 90% cap members were a unique situation in that we identified the error and then knowingly delayed correction of the error, which led to the interest. In Ms. Hewlett's case, upon discovering the error, we actively worked on resolving it, and that's where we are today. In the alternative, Ms. Hewlett argues that the interest should be lowered. The overpayment of benefit policy states that the actuarially assumed rate of interest at the time the overpayment is resolved is to be used, which is 7.125%. The last thing that Ms. Hewlett notes is the perceived inconsistency between the city charter and SDCERS board policies. In that, her argument is based off the city charter's financial hardship policy that should be addressed with the city as opposed to here. And on that basis, we would recommend that the board deny Ms. Hewlett's appeal. Ms. Hewlett is present telephonically, and she is available for comment, as well as I am happy to entertain any questions that you may have. Thank you.
Should I go first?
Is this Ms. Hewlett?
Yes, it is. Hi.
Good morning, Ms. Hewlett. Yes, why don't you go ahead? Generally we observe time limits for this type of presentation, so you're not in the room and therefore can't see what we're doing. But after about 2 minutes, Mr. Tran, is it 3 minutes? Okay. After 3 minutes, we're going to see a red light that is going to say that your time is up. And when that happens, we're going to get a yellow light actually about a minute or 30 seconds before that. But if you want to time yourself, 3 minutes is what we'll do. And then I may interrupt you at that point to let you know your time is up. And then you'd need to wrap up quickly, okay?
That sounds good. I appreciate you letting me know that, and I appreciate you also scheduling me first. My main on this third rebuttal is just to understand and to point out that the staff report had a lot of inaccuracies, and that was what I was the whole rebuttal was based on some of these inaccuracies and so forth. My second request is the request, of course, that there's future modifications to the city. And either the city and the retirement system need to get on the same page, because I don't believe that a financial hardship solution is my only option is to be paying $1,523 additional interest, which would reduce my monthly pay like 15% for 6 years. So to me, it just seems like if you're not going to really offer financial assistance, that part be struck out of, the the laws, because I spent all this time going through all these different rebuttals, thinking, that there was maybe a chance, for financial, but apparently not. So I thank everybody for paying attention, for going through. Thank you especially to Cynthia for going through everything with me, and that's about it. I'm open to any questions if anybody has any.
Do any board members have questions for Ms. Hewlett?
Thank you. I have a question on the staff report.
Correct.
And that is on page 4.
Mm-hmm.
It acknowledges, the IRS acknowledges that some plan participants, and particularly older individuals, may have financial difficulty meeting corrective actions involving large amounts with substantial accumulated interest. And then you go on to say that the amount sought in this correction is not large, nor is there substantial accumulated interest. And I don't know how we can come to that conclusion. I think it's all relative. My mother's a retiree. This would be large. This would be substantial. And I would respectfully disagree with this conclusion unless you have a basis for it.
Please.
I was just comparing that to other corrections, but I agree with you in that any correction could be difficult for the member or their continuance in this case.
Do I understand that the amount of interest that is really the subject of this discussion this morning is $1,050?
It actually is $1,605.29.
So is that the amount that we would evaluate under the standard that Mr. Katrosser just laid out?
Yes.
And what are the payment terms again that have been offered or that are available? $95.50 a month?
Approximately, yes.
And I heard Ms. Hewlett say 6 years. Is that how long at that rate it would take to pay off the $1,605?
I believe so.
Again, and I'm just using my mother as an example. My mother gets $1,600 a month in Social Security. $100 a month is a lot of money.
Ms. Hewlett is is actually next in the queue.
Sorry, I can't raise my hand. The interest was not $1,000. The total interest that was requested was $2,437.68 before the appeal, and then there was some additional $100 and something on top of that while I was going through this appeal. So that's the amount. One other thing is stated in my thing why this money is a lot. My AGI in 2015 was $23,612. It's not an excuse. I have had high cancer bills, medical bills on top of this, and I'm also receiving now $200 less a month because of the FAS error from 2001.
Ms. Youngflesh, would you address again the amount of interest that we're talking about?
Yes. Well, the principal amount, as was communicated to Ms. Hewlett recently, is $6,113.55. The interest on that, which is the subject of this appeal, is $1,605.29. That's interest at 7.125%, and that amount is amount that has been extended until November as an accurate amount.
When you say extended till
Well,
November, you mean that's as of November 1, it would be that amount?
No, as of right now, it'd be that amount. But if the board were to deny the appeal, that amount would be stayed until November, in which you would go to a payment plan. So that amount would not change. That amount would be good for, I believe it's 60 or 90 days past the board's decision.
All right. Marcel Voorhees-Rossman has her hand up in the back, so I'll call on her next.
I just want to clarify that the numbers we're talking about. So the original correction for Ms. Hewlett is for the amount of $3,488.40 in principal with $2,437.68 in interest. So the total amount due is $5,926.08. the $1,523.16 interest number that is getting talked about would be the interest if she were to go on a payment plan. And what was put in the initial letter to her was a potential payment plan, but that is not her only option. We do work with members. If they decide they want to do a payment plan, we can do something other than what was in the letter that was sent to them.
So,
But I wanna-
so it sounds like Ms. Hewlett is correct about the amount of accrued interest that's being charged, and that the smaller number is 1,523, and that would be the interest that would be paid over the course of the 6-year payout of that total sum of 5,926.
Correct.
Okay,
Did that
got
clarify
it. Anybody still questioning that? Because we can go over that again, and it seems like, at least under the standard that Ed mentioned, that would be the key fact. And it seems to me that the decision of this committee then is whether or not the amount of interest, $2,437.08, which is the amount that would be due today, qualifies as, what's the language again, Ed?
The IRS acknowledges some plan participants, and particularly older individuals, may have, quote, financial difficulty meeting some corrective actions involving, quote, large amounts with, quote, substantial accumulated interest.
Okay, so the large amount would apply to the 3,488, and the substantial accumulated interest standard would apply to the 2,437, is what it sounds like to me.
And at least in my mind, the criteria should not be, how does this compare with other individuals we dealt with, but how does it deal with Ms. Hewlett specifically?
All right, and it also mentions age,
Well, it uses the term older individuals.
all right? And
It
Ms.
changes for me every year.
And Ms. Hewlett has mentioned that she has financial hardship, and that's set forth in the materials. All right. Any further discussion before we vote?
I just wanted to add a couple of clarifying points here. And I'll jump in and Johnny can add if I'm missing something here. The financial hardship language that's in the IRS code is something we've known about for a long time. We've discussed this with the board many different times. The language that the IRS provides says if there is a financial hardship, the plan still nonetheless needs to be made whole by collecting that from the member, the plan sponsor, or some other person. So even under financial hardship, the money needs to be collected. We have had financial hardship cases in the past where I've explicitly gone to the city in writing and asked for them to cover the interest given the financial hardship case for that member. We've had members who were dying of cancer, and I've gone to the city, and the city has said no. So we have a clear record with the city in which financial hardship they have not been responsive to. Almost implications that they would pursue a legal action against us if we tried to pass the expense off on the city. That's why financial hardship, while in theory it makes sense, when the city refuses to consider that as a valid reason and instead throws it back on us, leaves us in a box of having to follow the IRS code and collect the full interest. So it's irrespective of amount, we're kind of bound by the IRS regulations.
Mr. Tran?
Mark stole most of my thunder just as your chief tax compliance officer. You do want to point out that the IRS does recognize a hardship. So if you don't believe that we should collect from the member, they say then collect from someone else, which would be the plan sponsor. And unfortunately, for the 13th check, the city has decided not to pay interest on that amount. You notice that there were two errors in this case. One resulting in a larger number that was resolved in 2006 because at that time the city said we'll cover that error. We're not seeking that money from the member because we're made whole. Here we're not.
So I guess an issue in my mind is whether any consideration should be given by this board to the fact that there was a $38,000 overpayment that was essentially forgiven, never collected back. I'm not sure that that's relevant to our consideration of what we're dealing with today, though I appreciate knowing it. I view that as very deep background. Its sort of relevance is that we do ask the city to cover these overpayment situations, both as a matter of policy and on a case-by-case basis. And as Ms. Hewlett pointed out, we're not on the same page with the city in that regard. The city has consistently rejected our requests, putting us in the position that I think Mark described. Ed, you're back in the queue.
Just really two questions for Johnny. If we don't go along with staff's recommendation, number one, would we be in breach of our fiduciary responsibility from what you just said? And secondly, would we be jeopardizing our tax exempt status?
Good question, Zed. The first one's a little trickier in that you do have plenary authority to operate the system, but you do have a board policy in place that says you'll follow IRS guidelines, and IRS guidelines would require you to collect this money from somewhere. So you'd be, in a sense, making an exception to your policy. Whether that rises to a level of fiduciary duty, I think that's a harder question, or breach of fiduciary duty. Secondly, as far as jeopardizing the plan, I think that is true. If you don't follow IRS guidelines for corrections, that's one of the signals for questioning whether you should be a qualified plan or not.
But voting against this isn't a breach of the IRS guidelines because, in my mind, it probably does create a hardship on her, regardless of what the amount is.
Well, effectively, what happens is this cost gets passed on to the city through the unfunded actuarial liability. I think the city ends up.
Well, we wouldn't do that in this particular case because we've also received tax guidance that you can't just dump it in the UAL. You need to explicitly request that the city pay for it up front, not on terms, not on a 15-year payment plan.
So it
we
becomes
would
a hole
invoice
in
the
our
city.
All right, we'd invoice the city. They'd refuse to pay. It would
Yes.
essentially be a hole in our accounting.
Right.
But at some point, if the gains weren't sufficient to make payments to members, the city would end up footing the bill. This plan sponsor would end up footing the bill someday, somehow. And the city has said they don't wish to do that. So in essence, we put ourselves in a position of telling the city that whether you want to do it or not, we're putting the risk entirely on you. And the city would have a basis to complain about that.
Yes.
Would it at this level, would it ever become headline news? Would the city ever do anything? No. So the question is foolish consistency the hobgoblin of small minds, or is it necessary for this board to act in a consistent manner with its policies? I don't think it's a breach of fiduciary duty one way or another, but I do think it's a very serious question, and I'll telegraph my vote. I'm going to vote to approve staff's recommendation. Notwithstanding what Ed had to say, I just think that hard cases make bad law, and we need to be consistent in the way that we do this. And I don't know what the next one is coming down the pike, or how much money's involved, or how many there are.
Just a point of clarification for me. When you say that we have to explicitly ask the city and they have to approve it, who is that? I mean, is that the council? Is that the mayor? Is it the city attorney?
No, it'd be an invoice from myself or Marcel to Mary Lewis.
Okay.
Yeah.
So the
The
mayor's
CFO of
office,
the city, yeah.
it would fall under the mayor's purview
Correct.
on whether this does or does not get
Right.
paid.
Right.
Okay.
And when they've had invoices like that from us in the past, they typically notify the city attorney's office, who provides them advice on whether to pay or not.
And I suspect it could go to city council if it were something that the mayor felt was worthy of that time and attention.
Then in this case, I would like to make an alternate motion that we, at this point, bill the city for this amount, let the city go through the process, let the city come back and tell us they deny it.
I'd second that.
We're going to do that anyway, aren't we?
Not if we
Deny or
approve
appeal.
staff's recommendation, we won't.
If the board were to approve staff's recommendation to deny, we would continue collection from Ms. Hewlett. If you did a different motion, which was to not approve this one, but instead ask us to invoice the city, that would need to be different wording than how this is written.
And what would, if playing this scenario out, if we adopt Ed's motion, then you send a letter to the city, and maybe 2 months down the road, we get the city's rejection letter, and we're back here again in, let's say, December or January, then at that point, if we were to approve staff's current recommendation based on the city's rejection of our request, what would happen to Ms. Hewitt in the meantime? Would interest continue to accrue? or would it be suspended?
My understanding is interest would continue to accrue.
According to our board policy, that's something we could revisit with the board too. Historically, when a member has gone through an appeals process, we try to move this through as expeditiously as we can to avoid any additional interest accruals. On occasion, if someone's showing good faith from a member's point of view to work through with us, we've suspended further interest accruals until it gets resolved.
Then,
Our policy would require us to continue charging interest, but we could discuss that with the board.
then I would suggest that maybe we put a rider onto Ed's motion that pending the final resolution of this after we make the request to the city, that interest not continue to accrue. Is that acceptable, Ed? Is that your?
We can do that. Effectively, that just adds to whatever we're asking the city to pay, correct?
Yes.
Right.
Yeah.
Maybe
All right.
that'll make them make a decision quicker.
Maybe.
There is a motion. There is a motion by Ed Kitroser to table the staff's recommendation, I believe, and to instead make a specific request of the city to is it forgiveness or is it to pay the interest? To pay the interest,
Pay the interest, yes.
which at present is $2,437.88, I think.
And I would like to recommend, too, when we do in fact bill the city, that we don't just send them a bill, but we send them a bill with an explanation. We discuss financial hardship, we discuss the specifics of this case, so that they understand where our board is coming from.
Yeah, we will do that. That's exactly what we've done before, and we'll do that again.
Outstanding.
And that motion, which we'll see up here, I suspect in a moment, has a second from Alan.
So we need to go through two motions, one to table and then one for Ed's.
Right. So
You can first and second this one since there was no first and
there was
second
no
on the
first or second
motion.
on the prior motion, so I think this motion actually is the one on the floor.
Correct.
Okay.
Yeah.
Good. All right. Then let's have a vote.
Okay.
Those in favor?
Ready to vote? All votes are in.
Okay. It looks like it carries 4-0 with one abstention.
I got the other way, 4-1 with 0 abstentions.
Oh, there's a no. I'm sorry, no abstentions. So it carries 4-1.
Right.
That didn't happen to the printed version didn't say that the member would not be charged interest during the period in which it takes us to come back to this.
By
But
policy, they would be charged interest. So with this revised motion, we'll bill the city instead.
all right, great. Okay, we're through item 1 on a 50-item agenda.
Thank you, Ms. Hewlett.
Mi- But I do need to let you know, Ms. Hewlett, that the chances of the city paying this interest invoice based on our prior experience with the city is slim to none. And I think all we've really done is deferred for a month or two, coming back to this recommendation from staff. So I want to make sure you understand that. It's not okay. Yeah, Cynthia Queen will do that for you.
Great. Thank you very much. Thank you, everybody.
See her nodding her head. Thank you. All right. That brings us to item 2, staff's recommendation to deny the appeal of James Wiatrak. I'm probably mispronouncing the name, but perhaps, Susan, you can correct me.
I think he pronounces it via track. I don't believe he's present today. This is Staff's recommendation to deny his appeal. Mr. Viatrak had underpaid his biweekly contributions. It was a calculation that was incorrectly entered due to a break in service. It was manually entered when he was rehired with the city. He argues he should not have to pay for the underpaid contributions or the interest. The city will not pay for the underpaid contributions or the interest, and thus we're required to seek it from Mr. Viatrak to comply with the IRS codes. The amount he owes is $632.67 plus interest. And I'm happy to answer any questions you may have.
I don't see anyone in the queue.
Just a quick question. I know Mr. Wiatrak said he'd like the outside auditors to verify this, and I agree that's ludicrous. But has our internal auditor had an opportunity to verify this? Just so there's a second pair of eyes looking, and we can tell them we've done that?
We're
Well,
getting
there's
a
far-
no from the internal auditor.
There's far more than a second set of eyes that have looked at this already, but Lee would probably be the fourth or fifth to take a look at it, but go
I
ahead.
have not been asked to review the file.
So could we have Mark address the issue of how carefully this has been reviewed?
Actually, I'm going to ask Marcel to do that, but she is more familiar with the details of the review process.
So our normal process when we have a correction is there is a review by staff that makes a determination and then a review by a supervisor. Once it starts going through the appeal process, if there hasn't already been more review than that, which there may have been, it gets additional review. So at this point, I would say conservatively, we've had staff, a senior analyst, a supervising analyst, and a program manager review this correction to make sure that it is valid and that it is correct. So there has been at least 4 sets of eyes that have looked at the details of this correction to date.
All right. There is no one else in the queue. So I've made the motion to approve staff's recommendation. Tom Sullivan has provided the second.
Ready to vote. All votes are in.
And the motion carries 5-0. Bringing us to item 3, staff's recommendation to adopt the revised appeal of staff decisions regarding benefits policy. Mr. Tran.
Thank you, Val. The board has a policy for appeals of staff decisions that affect their benefit. You just went through 2 of them. The appeals process is 3-stepped. First, the appeal goes to the member services director. If that's denied, to the CEO. If that's denied, to the board through the B&G committee. In order to make this more efficient, faster, resolve these appeals without losing any review or due process rights, staff is recommending that you combine the first and second level appeals such that the member services director and the CEO would look at it together, get their decision back faster to the member so these appeals can be resolved faster. Questions?
Do we lose any independence or create any bias by having the second and third stages combined?
I don't think so. I think
You're combining the first and second
First and
stages.
second
Thank
stages.
you. The goal is for the member services director, the CEO, and every other staff that look at it, that they look at these appeals differently, independently, and then get together. In doing that, I don't think there's any bias that's created in that it's the same people, and they are looking at it through new eyes.
There's no one in the queue, so I think we may be ready for a motion. So the motion's been made by Alan Arlotto. It's been seconded by Ed Katroser.
Ready to vote.
And that motion is approved 5-0. That brings us to item 4 on the agenda, the new independent audit committee member appointment, and that's Mark Hovey.
Dave Kramer served 6 years on the SDCERS Audit Committee. He's completed his last meeting yesterday, so we thanked him publicly at the Audit Committee meeting for the time that he served. That means that we needed to recruit, look for, interview, select a new independent audit committee member, and The network that all of you have led to Ed Kitroser identifying a candidate, Julie Furl, who's with us today. She has expressed a letter of interest in serving on the audit committee as an independent member for a 4-year term. And our board policy asks that this committee, Business and Governance Committee, interview Ms. Furl to determine her qualifications to serve. The qualifications are in the materials that are in front of you there. So I will ask Ms. Furl to come up and join us at the microphone here. I thank Mr. Kitroser for identifying Julie. Jim Smith, who's on the audit committee, also has known Julie for quite a while and had great things to say about her. But the audit committee doesn't get to select. You all do, and then the board tomorrow. So with that, I'll turn it over to our chair to ask Julie any questions you all think appropriate.
Welcome.
Thank you.
So have you recently visited a mental health professional and had an evaluation done?
Yeah, I mean, I do sit on other audit committees, and I report to a lot of audit committees as an auditor. So yeah, I'm regularly seeing someone.
All right. Well, I would ask Ed if he'd like to say a few words.
Julie and I probably know each other more than either one of us want to acknowledge, but while we haven't worked together specifically, have instances where my firm was the independent auditor and Julie was on the audit committee or vice versa, so we know each other that way. Julie and her firm both have a commitment to serving the community. Julie does a lot of volunteer work. Her firm does a lot of volunteer work, and I frankly think she's a natural fit. Part of her accounting practice is auditing pension plans, so she has in-depth knowledge of the issues that we face.
Well, that sounds terrific. I don't have any questions. I'm prepared to vote to approve.
Yeah, I would too. Just, it's the rare person that's willing to step up and do some public service stuff. And we all volunteer in a lot of different ways, but on a public system in a public way. And this is a very public way that we all take a little risk when we all sit in these seats. And I know you know what you're in for, and I appreciate you having the courage to do it. So thank you.
Thank you.
Great. All right, so the motion has been made to approve Julie Furl as independent audit committee member. I've made the motion, and Carol Broad has provided a second.
Ready to vote?
And that carries 5-0. Congratulations, thank you, welcome.
Thank you.
Thanks, Julie. Julie does have the schedule for when our audit committee meetings are, so I'm sure she's probably already put them in her Outlook calendar. We'll look forward to seeing her in November, our next meeting.
On tomorrow's agenda, is there any space in the agenda for a public thank you to David Kramer, separately from any of?
He will not be at tomorrow's board meeting. We can certainly do that.
I think
you and I could work that out as part of the
I think it would make
D&G
sense
report
at
out.
this point, yeah.
Yeah, we did present a certificate of appreciation to Dave yesterday at the audit committee meeting, but we can certainly read that into the record tomorrow.
He's done a terrific job on the audit committee and served for a long time, and so I think we should do
Also as
something.
audit committee chairperson for 3 years, which is very much appreciated.
Great. So that takes us to item 5 on the agenda, staff's recommendation to revise the Board of Administration charter. Mr. Tran.
This charter outlines the trustee responsibilities and expectations. Back when the board met more frequently, the charter, you had asked the trustees to not miss more than 3 consecutive meetings or 4 in a year. Subsequently, we reduced the meetings to just 6 times a year, every odd month. And so staff is recommending you update this request such that no trustee miss more than 2 consecutive meetings or 3 in a calendar year.
Can I ask just a quick question? I certainly agree with this in principle, and I support it, but does this provide any type of flexibility for illness or extenuating type of circumstances?
It does. In the charter itself, it says there can be an excuse for health or some other issue. The board president may excuse the absence of any member from a board meeting when the trustee's absence is justified by a factual finding of good cause.
But what isn't expressed here is that the 2 absences be unexcused absences. So it isn't, in reading it, it wasn't clear to me that those 2 sentences dovetailed,
Okay.
which is a technicality, but really goes to Ed's point. So I do think that failure to attend 2 consecutive meetings or 3 meetings in a calendar year without without prior approved excuse or something it's probably implied there, but it isn't expressly stated. And I'm not suggesting that we have to amend that now. We've got lots of other things to do, but.
Just as a matter of process, I appreciate having this in here, and that it gives direction to the board members of the expectations put forth by the board. How do we enforce something like this? It's simply we need to have conversations with board members that are not attending. Is that what I'm understanding? Okay.
I believe that's true. I don't know of a way that the board can kick off a trustee given that they're appointed or elected, but there's public censure, there's phone calls and other ways.
Okay, thank you. As the one who I found, like, I would be the one as a president making excused or unexcused determinations. I assume that would be me as the president, sitting president, handling that stuff too. Obviously, along with Mark and with Val, guidance too. So okay,
That's
thank
correct,
you.
Ellen.
So I believe the policy as written does give us that flexibility. If you'd like to make it more explicitly clear, we could do as with exceptions approved by board president.
I think it's clear enough, but it did strike me that it could be made clearer at some future point in time if people wanted to do that. But we've discussed it here, and I think the understanding is consistent.
Okay.
That excused absences don't count against your 2 or 3.
Right.
All right. So with that, we have a motion to approve staff's recommendation from Alan Arlotto and my second.
Ready to vote. All votes are in.
And that motion passes 5-0. That brings us to item 6 on the agenda, staff's recommendation to revise Board Rule 2.41.
Yeah,
Tran.
Thank you. This rule states the amount of interest that is credited to member accounts. Last year, the board voted to reduce the assumed rate of return to 7.125%, effective July 1st, 2016. So as required by the City Municipal Code and historically done for the port and airport, staff is recommending that the board revise the crediting interest to match the assumed rate of return of 7.125 effective July 1st this year.
Should we go on and talk about next year at the same time? Because we've already agreed to lower it to 7%. Why don't we just cover it all at one time?
We could. Did you want to amend the,
It'll just save us from voting on this next year.
so for fiscal year 2017 to 7.00 for all plans?
Yep.
You want to just add as amended to
Yeah.
the motion here?
Fiscal year 18.
Effective July 1, 2017.
Right.
Pick a date. Which is fiscal 18.
Right. Correct.
So for fiscal year 2017, it needs to be 7.125?
Correct.
See, I had an error right there. Thank you, Ed. So we're going to amend it, so fiscal year 2017 will be 7.125% for all plans, and for fiscal year 2018, it will be 7.00. And I'll make that note for the board to understand their vote too.
So there's another row in there for 2016 that's not there, which probably should be there then?
16 should be still at 7.25. 17 should be at 7 and an eighth. And fiscal year 18 should be at 7%.
Yeah, I was just looking at the board rule, and I think that 16 should be 7.25 because we changed the rate for fiscal year 17. which would be the next row that's not here, correct?
So fiscal 16 should be 7 1/4. Fiscal 17 should be 7 1/8. And fiscal 18 should be 7.0.
So
Right.
for,
So
for
the-
tomorrow, we'll revise this chart that shows
Right.
fiscal 16 at 7 1/8.
I'll bring a handout so it's very clear. Thank you for clarifying that.
Okay. With those amendments, we need a motion and a second.
Ready to vote?
All right, the motion's been made by Carol Broad, seconded by Ed Katroser,
All votes
And-
are in.
and it carries 5-0. That brings us to item 7 on the agenda, staff's recommendation to adopt resolution number 2016-01. Johnny Tran.
Yeah, this resolution lists who amongst the trustees and staff can execute agreements on behalf of SDCERS. Corey Buhan has left SDCERS, and then Jamie Hamrick and Anders Norman have a promotion. So I'd just like the resolution to reflect that. There's no other changes.
All right. Let's move quickly through this. We have a motion to adopt by me, a second from Alan,
Ready to vote?
and this motion carries 5-0. Bringing us to item 8 on the agenda, staff's recommendation to adopt the CY 2017 board and committee meeting schedule. Mr. Tran.
Thank you. Before you is the proposed calendar for next year for the meetings. So you know, the board meeting policy requires that the meetings occur on the second week of the odd months. You'll notice November, though, the second week is a holiday for staff. So I'm asking you personally if we can have the meeting on the first week of November instead. So that would be an exception to your policy.
Seeing no discussion and no one in the queue, let's go ahead and move through this one. I move approval of staff's recommendation. Alan's provided the second.
Ready to vote?
And I ask that if calendar appointments could be sent, that is extremely helpful for me. I know Cynthia does that now, so if that can continue, that is, yes. I live by this little thing here.
We only
you.
have 4 votes in, so we're waiting for the, there we go. The motion carries 5-0. That moves us past item 9, which has been pulled from the agenda, to item 10, staff's recommendation to ratify the board election process for the retired trustee seat. Ms. Packard.
Good morning.
Morning.
Good morning.
So although we encountered some challenges with technology, this election has gone very well. We received an outstanding amount of mailed-in ballots, over 2,800 to be exact. And I would like to give a thank you to the city clerk office because they've been a wonderful partner in all of this and have assisted greatly. Per the process, we also need to have the results certified by the city clerk office, and I'm coordinating with them, and I will with 2 trustees. And once those results become available, I will let everyone know. And we will have our new trustee attend the November meeting. And with that, I will answer any questions you may have.
You note that the voting system had an untimely demise?
Yes.
Are they eligible for disability?
And I'm not sure it was untimely. I think it was a timely demise. It was somewhat archaic.
How many ballots were sent out?
Close to 8,000.
All right. No one else in the queue? We have a motion from Ed Katroser to approve staff's recommendation, and I have seconded the motion.
Ready to vote?
The motion carries 5-0. And Ms. Packard will stay in her seat and address item 11, staff's recommendation to revise the board election process.
So this is a great opportunity for us to modernize our process, and we just need to update our policy to reflect that. And we met with several election vendors and narrowed our decision down to 1. I would like to give a thank you to Dave Bond for assisting in that process. And moving forward, we intend on conducting our elections mostly online, but offering options to accommodate all members. And I also consulted with our retiree groups, and they were very enthusiastic about this new approach. So I'm excited to have this process in place for our general seat election next month.
Do we have any questions or comments?
Question for, I guess maybe for Johnny. Are we governed by any body or law on how we conduct our elections? Because I know on some boards in the labor side, Department of Labor actually has very strict rules on how board members are elected. So is there anything that governs us, or are we left to devise our own system with our own security?
I don't know of any city rule that requires us to conduct our elections a certain way,
Okay.
other than who gets to vote and how many seats
Right. Okay.
and their terms.
Jessica did reach out to the city clerk's office about the process we were contemplating. Could you share what that discussion was?
Their initial involvement was to just be the unbiased hand in all of this, but since we're using an outsourced company, it kind of eliminates that. And they are pretty much in compliance with whatever we want their role to be.
Okay. Not that we get a lot of controversy surrounding our board elections, but
I don't know, this election has been very close to the Hillary-Trump election. I don't know.
well, I asked the voter turnout's about the same for any election that we have for anything.
My impression, this is my first election, but it seems that we've had a higher turnout compared to others. And I've heard the city clerk suggested that it was because we included a self-addressed stamped envelope.
Doesn't get any easier than all you need is a pen and a tongue to lick the envelope. Not necessarily yours.
Yes.
So, all right. Thank you.
All right. I think we need a motion and a second on this. Motion's been made by Tom Sullivan with a second from Alan.
Ready to vote?
The motion passes 5-0. Thank you very much, Jessica. That brings us to item 12 on the agenda, which is a non-action item. In fact, 12 and 13 are both Johnny Tran non-action items. So, Johnny, why don't you take it away?
Yeah, each year staff reports on fees in excess of $50,000. 4 years the unaudited report for last fiscal year. Last year's report totaled $5,760,000. So this is, this year's is $5,700,000. Last year's was $6,123,000. So it's a little lower than last year, and that's mainly due to completion of our pension software system costs.
I don't know that I need to see it as part of the board package, but I would like, if you can, to see a 3-year comparison. I would just like to see on some of the consultants if we're trending up or down on the fees we're paying them.
Okay.
We'll get that to you.
All right. Going straight on through. Item 13.
All right, thank you. And the next report is the semi-annual travel and training report covering January of this calendar year through June 30th. Ed, compared to last year, last year's total was $59,000. This year's total is $45,000. That's mainly due to decreased costs of trustee training. That's all I have, Val.
Any questions on this report? There being none, let's move on to item 14, the annual report on overpayments. Ms. Rossman?
Good morning. In front of you, you have the annual report on overpayments and underpayments. Those are this report is required by the Overpayments and Underpayment Board policies. This is the overpayments and underpayments, overpayments of benefits, underpayments of contributions that were resolved as of June 30, 16. Happy to answer any questions you may have.
In the column over on the payment, police recruit, what does that mean?
It was a category of corrections we did where there was a time when police recruits were hired by the city, that was optional time, that they could go back and purchase it. And then there was some very complex rules about whether they purchased it as a general member or a safety member, depended on when they purchased it. And so there were some that were done in error. In general, it resulted in refunds to those police officers.
Thank you.
The police officers weren't sworn in until a certain period in the academy. So they didn't become sworn until that day happened.
Thank you.
All right. No other questions? Thank you very much. That brings us to old business. Item number 1, report on overpayments to members exceeding $10,000.
So I wanted to give you a couple of updates on this report. Mr. Malloy, who is one of the first member that's listed on here, is in the process of redepositing his contributions with SDCERS. That will then allow Board Rule 3.2 to kick into effect, and he will no longer have an overpayment issue. So we've been working with him to get that processed. Also, Janet Cayley, who is listed in the last section, first person in the last section, she has paid the overpayment in full and has withdrawn her appeal, so she is resolved now. And Larry Lieber has also resolved his outstanding issue. I also wanted to call to the board's attention, there are 2 people that are listed on here, Shirley Bradstreet and Wanda Lewis. Those are members that were in the process of appealing their corrections, and through the appeal process, at the staff level, were able to provide us with additional information we did not have, so that their corrections, in one case, completely went away. One dropped down to $333. So I wanted to make sure you were aware that we do work very hard on these before they get to the board, and there are times when we're able to resolve them in the members' favor before you see them. I'm happy to answer any additional questions you may have.
Can you explain what type of additional documentation they would bring that we didn't have before that
Sure.
caused this?
Ms. Bradstreet was able to provide additional documentation on the support for the change that was made to the 90% cap rules, and she, along with Ann Smith, provided us additional information that we did not have in the form of MOUs and documentation from the negotiations. So that was very helpful. Ms. Lewis was able to provide us documentation about when she submitted her request for her purchase of service credit contracts. There was a date in the Muni Code. It had to be submitted by that date, and we did not have that information available.
I guess the reason I'm asking the question is, could other members be in the same situation and they're just not aware of the additional documentation they may be able to bring forth to adjust their overpayments?
Potentially they could. I will say that Cynthia and her staff work very closely with members. So everybody who's on this list would have received a personal phone call before their letter was mailed with an invitation to come in and meet with a counselor. And Cynthia would have to answer the question of how many, but my recollection is that 100% take advantage of that. And so then they come in, they sit down, we go through all of the records with them, and we go through what the specific issues are. So, for example, in the case of Ms. Lewis, we were able to say the reason you have a correction is because our records do not reflect that you made the request for these PSC purchases before this specific date. So then it gives her the opportunity to say, well, wait, I've got documentation that can show you that. So I think because of the detailed work that we do with the members, as soon as we identify these corrections, they probably have that opportunity, but I can't speak to say they definitely do.
Let's go ahead and invite Cynthia Queen to address that while we're on it.
Thank you. It's better continuity for me to say it now than to say it when I'm up on my report. To clarify the answer to that, I want to make sure that it's stated clearly that we never want to have to correct a member. We want everything done right the first time, and we make every effort to do that. And when there is a correction that is to be made, we look at all past information we have, legal opinions, we consult. If we are aware that there was a situation where one member provided additional information or that something was in an MOU, that's the first thing we're going to go and look at to see if it could possibly help another member. So it's not, and not that you're making that indication, but it's not a matter of, oh, is the member going to be smart enough to figure this out? I absolutely know that we are smarter about all of this than anybody else out there because we do it all day long, and we are there to try to help these members as much as we can. So we work with the members, we explain all the details, we ask questions if they might have additional information, ask them their recollection of what happened at the time. It's a great deal of time spent trying to work with the members to try to figure this out. And in the situation where we were looking at past information that related to the memorandums of understanding from the negotiations that affected when the municipal code amendment was codified, we went and looked in great deal through all the old paper binders in our law library and consulted with attorneys who worked on it in the past to see what information they had. So we were hopeful that we might be able to find something that would provide answers. And in these two cases, there was additional information. So that is always looked at.
Do we get 100% returns on invitations to come in and meet where we have one of these correction situations?
I would say that Marcel's answer was very close. As she said, there are occasional members where they just want to be done with it and they just pay an amount owed, or they understand what the situation was. But we reach out to the members in addition to the letters. There are phone calls in numerous cases, and then if we haven't heard back from a member in a certain period of time, we follow up with them. Sometimes a conversation over the phone is able to resolve the issues for the member as opposed to coming into meeting with us. But it is the vast majority of the time, there is a personal conversation that occurs unless the member themselves chooses just to be done with it.
Thank you.
Something else I'd just like to add, in the annual action plan that we work on, the board may recall an item pertaining to backfile conversion of old manual documents. And in 2004, I'm looking at Mr. Bond, is that about when Documentum went in place? Around 2004, 2005? You can shout it out.
Documentum was implemented in 2007.
2007. Okay. Staff, now nearly a decade ago, went through the proverbial manual file on members and went through every page that they believed should be electronically captured and marked it. We then scanned all of that information into our electronic documentation system. But then there were some documents in those files that staff, again, a decade ago, thought were not germane to be kept electronically because they didn't affect a member's benefit calculation in any way. So those were not scanned. So we still have those manual files. And in fact, through this member correction process, we've been working on corrections for a couple of years now. When we've had corrections, we've gone back and pulled from dead file storage, we call it, these manual files to go through and look a second time if there are any documents in there that we failed to scan 10 years ago that are relevant. And in a few cases, we found some things that are of information. In fact, we made a decision last year to now go back and scan that complete file rather than, so we've revisited the decision made 10 years ago about scanning only part of it. Now we're scanning the whole thing. So that's an active project going on right now, is to completely scan every single scrap of information we had on a member file. So it's all electronic. Our records could always be better, but they've never been better than they are right now.
Thank you, Mark. Thank you very much for that report. That concludes old business. We're now on to status reports, and we lead off with the legal division report from Mr. Tran.
Yeah, you have my report in front of you. I'll highlight two things. One thing I'm excited about is self-generated letters. We deal with a lot of community property cases, and in order to document those, we manually draft letters and scan them to the files with the help of IT and our pension software system. Those are self-generated letters. They're automatically uploaded and printed for us. So when we wake up in the morning, they're there. So that's really good news on our end. The other thing I'd like to highlight is that we have submitted a proposed revised conflicts of interest code to the City of San Diego, and the City Council will probably approve that before December of this year. It updates the current positions, officers that should be filing these Form 700s. Any questions?
Nope.
Thank you.
Mr. Bond, information technology.
Yes, the only thing I'd like to add to my report is just a friendly reminder to update your iPads to the latest version. It's always important to be on the latest version of the software so that all known bugs are dealt with. And other than that, I'd be happy to answer any questions.
Thank you very much. Let's move on then to member services and Cynthia Queen.
Good morning. It's nice to see you all, as always. Wanted to provide an update on our customer service efforts that we have in the call center, and specifically on the wait times that we have had in the call center. Very important part of our business. We have staff there all day long, and we have more than 100 people calling us every day. At the last meeting, we had discussed the trends in these call wait times, and customer service has always been our top priority. But we had felt like the standards had gone, the wait time was longer than what our personal standards were, and we've been working very hard to address that. There are always challenges in any work environment, and we need to work through those. So our supervisor in the call center, Shankwana Pemberton, who's sitting in the back there, and you've met her before, she closely monitors the service levels, and she's succeeded in working through the challenges to achieve a really good improvement, and we've now brought that wait time down. We've been averaging wait time of 27 seconds in August, and that has continued through this first time in September. And I just really want to thank Shaq for her concerted effort in this. She's worked through a number of staffing transitions and other challenges, and she's an excellent asset to our members, and I know that she is appreciated by the members. We do hear comments from our members on a regular basis that they appreciate the personal service that they receive. And with our comprehensive outreach, not only can they call and talk to someone each day, they have the personal counseling appointments, and we also have the seminars that our staff puts on, and the information that we provide on our webpage. So I am pleased with all the efforts that we make for our members, and I feel that we have good feedback from them overall. And if you have any other questions about the rest of my report, I'd be happy to answer it.
Seeing none, thank you very much. Look forward to that average 20-second wait time.
Absolutely.
All right, that brings us to Ms. Rossman with Benefits Administration.
Hello again. I wanted to pull out one piece of the report and talk about it a little bit more. We're working with CEM for a benchmark survey against some of our peers. It's looking at member data, financial data, transaction volumes, the whole member services area, the website, call center, member portal. But the two pieces I really wanted to call to your attention is the first bullet, which is that 97.7% of our retirees received their first retirement check within 30 days of receiving their final paycheck from their plan sponsor. And that's an improvement we were able to make through IRIS and through changing our structure of doing things where we no longer wait for the month end to make that first payment to retirees. We do a weekly payroll every single week. And so as soon as we can get them processed and paid, we get that weekly check out to them that catches them up, and then the next monthly payment, they're on track. The other one was something that Cynthia just talked about a little bit, the 36,984 calls that we got last year. That's an average of over 145 calls a day. I think that's an impressive statistic, and CEM has already come back and asked us some follow-up questions, and that is on the high side of what they're looking at with some of our peers. And I think that's partly because we don't have an automated system. Press 1 for member services, press 2 for counseling, all that. And also the great customer service that Cynthia's group does provide, that members know they can call and get their questions answered. And I'm happy to answer any further questions you may have.
Do you have any comparative statistic for that first bullet point, the 97.7% within 30 days?
Not yet. I'm anxiously waiting to see the results of the survey and see how we compare.
Great.
I'm looking at Cynthia on this one. I remember the first several years I was here, we used to regularly tell members it'll take 6 weeks to get your first retirement check. Does that sound about right, Cynthia?
8 weeks.
Yeah.
8 weeks.
Wow.
And that's about where it was when I got here. It was about
that's
6 to 8 weeks. So.
We used to tell our members to be prepared.
You've been working.
Right?
Yes.
You're working for 30 years. You're looking forward to retire. Then you retire, and it's like no cash flow for 2 months. It's like, oh man, this is not a good situation. So yeah, it's a great job.
All right.
Okay.
Thank you very much. That brings us to our finance report and our trust financial statements. And so items 5 through 8 will be covered by Mr. LaSalvia now. Ted, if you wouldn't mind, just go ahead and progress right through them.
Okay. Good morning, everybody. You should have my reports in your packets. the finance staff report, we are current with financial reporting through July. We're actually working on the August financial statement close now. These are unaudited financial statements because we're in the middle of our audit at this point in time. In addition, we've completed the June 30th budgets versus actual report, which you should also have available. There will probably not be any further adjustments to those values based upon the audit. Additional priorities, once again, always includes the never-ending process of ensuring the integrity and accuracy of the IRS pension system, which finance relies on quite heavily from a reporting standpoint. You've heard the challenges and trials with respect to member services and benefits administration. And they've done a great job of ensuring their transactions are processing properly within that system. Finally, with respect to the financial statement audit, only us accountants would really love this, but GASB 72, we always have new standards, and it just seems like only yesterday I just got through the last set of standards. So now we have a new disclosure standard, which will be brought before the B&G committee when we provide the CAFR, where we're going to talk about the level of a fair value associated with financial investments. This is something public companies have been doing for quite a long time. Pension systems and government in general are catching up to some of the reporting that has been done on the public company side. And with that, I'll go directly into the unaudited financial statements. Two caveats with these unaudited financial statements. These are the financial statements for the fully loaded operations of SDCERS. They include the operations of the health division, which I've stated time and again that is actually funded by the city of San Diego. You will not see those operation results reported in the CAFR. We do disclose some information related to that, but it's not in our financial statements. In addition, there is one major adjustment left to be made within our books, and that is the fair value adjustment to our lag reported investments. As of June 30th, when we receive our information from our custodian, we don't have the 630 fair values for private equity and infrastructure and the real estate investment funds. That's because their fair values are actually lag reported. And if I'm correct, the investment committee will be going over, I think, the 331 values coming up here in their committee meeting. Consequently, in order to get the audit done in a timely manner, we require a confirmation process where we go directly to the fund managers and tell them that we need them to give us the fair values as of June 30th, even though investments may not yet have that information in report format from their investment consultants. It's the same process that auditors rely upon when they're trying to fair value investments. So consequently, the numbers I'm reporting here do not reflect any pickup for those fair values as of year end. As a result, for the full year ending June 30th, we have a decrease in plan net position of $136 million. Two major components of additions. We have contributions on one side. We have investment earnings on the other side. Money is paid out for admin expenses and the payment of benefits. Now, since the payment of benefits is higher than the contributions coming in, we rely upon investment earnings to get us to a positive state. It's been a challenging year. I can say definitively that we saw improvement towards the end of the year, and consequently the loss isn't as high as what I had reported in previous interim financial statements. With respect to
When you say loss, you're just talking about a reduction in
plan net position.
assets.
Yes,
Net plan
it's the same thing as I'll say a net loss, but at the end of the day, there will be a pickup related to fair value. I'm estimating. I'm waiting to get that final information.
Technically, it's only a loss if you're comparing it to some sort of actuarially determined value that we need to have. I mean,
Well,
it's not.
From a straight cash flow perspective, if I look at it from
Negative cash flow.
Yes, it's negative cash flow
Negative
out.
cash flow.
Right. So
At some point, the plan will have negative cash flow. I mean,
yes.
so it's not technically a loss, but it is a negative. It's a reduction in net. plan.
Tying
it
it all
always begs-
together, I still estimate we're in the growth phase in our portfolio based upon assumptions where you would expect the total value for the portfolio over the near term to increase until such time as, benefit payments exceed those cash flows again. And
Assuming we hit our investment earnings every year, even though we have more benefit payments than cash contributions coming in, that negative cash flow happens each and every year. Investment earnings make us positive.
Right. This year,
And that trend will continue for about 10 years.
And the investment earnings didn't make us positive this
Yes.
year because they were below the
Expected rate of return.
Correct.
And so our percentage of funded, will go down. In other
little
words,
bit.
So instead of being 76% funded, we may be 75.
72, 73, something like that. Yep.
The key factor is our liability is still growing.
Correct.
And we should keep growing our assets as long as our liability is still growing. Once our liability tends to top out because we're a closed plan, that would be the point in time, I think, that we would start to see negative cash flow would necessarily be an expected thing.
Correct.
Okay.
I love the discussion on accounting, so it's good to.
We're here to make you happy,
I'm
Ted.
like, wow, you're in. Can we do this every period?
So I was just going to ask Ed Catrosa, should we just drop our expected rate of return to 4%?
Hold on a second. Hold on. Let's not get too happy with the numbers. With respect to
Val?
overall, as I kind of said, you have contributions on one side, you have investment earnings on the other. I've been reporting all year long that our net investment earnings were negative. We crawled above positive to a positive $5 million at the end of the year. But still, consequently, a reduction.
Would you urge us not to look at 3-month increments when we're dealing with these kinds of things?
I'm going to report on them every period.
All right.
The schedule of
It's not
reserves.
just for us not to react every month.
Well, that's the whole point. You're in it for the long haul. This is a marathon, the schedule of reserves as of June 30th reflects a composition and net position restricted for pension benefits. As of June 30th, total reserves are $5.7 billion, an increase of $42 million over the prior year. You've never asked me this question, but you might be asking, why would it be an increase when we've had a net loss? Well, the reality is there's another component in that schedule related to unrealized gain or loss, and you'll see that the corresponding decrease in unrealized gain for the full fiscal year. With that, I'll answer any questions you have on the unaudited June 30th financials. Seeing none, I will go directly into the,
July 31.
well, I will do the budget versus actuals, and I think July 31 last. So year-to-date for the fiscal year ended June 30th, total actual expenses of $44.2 million, 9.4% under plan based upon a budget of $48.7. If you remember when we went through the FY17 budget process, one of the schedules that I gave you was a projected where we thought we were going to end up at the end of June the 30th. So we already had baked into the fact that we were going to be under budget for a number of reasons that I'll get into. One of the things that I kind of wanted to point out is that we were within $200,000 of where we had projected, and that was based upon December values. So we believe that the model that we had projected in order to get to FY17 budgeted values is a valid one and will allow for more predictability. Administrative expenses finished the year at $13.5 million. It's important to note that what we're calling administrative expenses are, the major categories that you see on that budget schedule, starting off at salaries and wages. That includes the full operations of the investment division. The investment division, from a financial reporting standpoint, are classified as investment expenses. So we still refer to it in the actuals versus budget report as an administrative expense, but I did want to point that out. We finished the year 5.3% below the $14.2 million budget. Salaries and fringe were $7.2 million, 5.3% under budget, primarily due to the realized headcount savings that we talked about during the budget process, as well as a couple of open positions in the BA member services divisions. Legal expenses were $0.8 million, or 22.5% under the $1 million budget. And once again, due to lower than expected litigation costs for the PSC litigation cases, we understand that 4 of the 5 were settled, and the 5th one was sent back to court for further work. Legal is probably the most variable because, as Johnny can attest to, costs are dependent upon the actual litigation, cases that come through and how they're actually litigated. IT expenses were $1.8 million, or 6.1% below the $1.9 million budget. This is primarily due to declines in technical support, labor, pension system support, professional services, and computer hardware supplies. At the end of the day, normally IT costs are pretty steady and right on budget. Dave does a good job of managing his budget at a high level of detail. General ops were $3.7 million. This is on budget with the FY16 budget. We had lower expenses for fiduciary insurance, audit services, travel and training, as was noted, and disability processing. This is offset by increased office operations expense for temp labor necessary to meet the needs of member services in the health divisions, and higher actuary services due to the completed experience study. Investment management expenses were $30.7 million. This is 11.1% under plan based upon a $34.5 million budget. Once again, when we went through the budget process, I kind of explained that we had lower than budgeted real estate fees for really what amounts to 2 main reasons. The first was we were using an existing budget model that did not reflect the decline in certain mature real estate funds. So what ends up happening is that those funds will shrink over time, and the actual investment expenses associated with them will decline based upon the size of the actual portfolio. They were still being budgeted based upon the general premise of either of invested capital or committed capital. We changed that model for FY17, but reflected the fact that we would wind up the end of the year with budget savings in that particular area. Private equity, of course, is higher because of the investment in a new series, which, once again, private equity has a higher fee structure, and we expected, once again, to also see that. Equity and fixed income fees drop because of the investment in private equity, so certain funds were reduced down in investment status so that funds could be invested in private equity. Lastly, capital expenditures. We had $400,000 in capital expenditures. We had originally budgeted only $100,000. $118,000 related to the IRIS pension system, which was a payment that we had previously budgeted 1 year prior and was actually paid for here in FY16. In addition, the $240,000 boardroom HD video upgrade, which we had originally projected to cost SDCERS $50,000, actually cost SDCERS nothing, as it was completely funded by those PEG grant funds and paid for by the city of San Diego. The only other small item was related to about a $17,000 member services call system. And with that, if you have any questions, I am more than willing to answer them.
Just a couple of questions, Ted. The actuary services are $55,000 above budget. You mentioned that's due to the experience study. But if memory serves me, when we did the budget, we knew we were going to have an experience study done. So I'm not understanding why we're so far above budget.
So remember, that budget was set 1 year prior based upon an estimate for what that study costs. In essence, we probably had budgeted too low for what the full value of that study was, which is the primary reason why that would be above budget.
So what is the experience study costing us? How much is that?
I don't have that particular breakdown in front of me.
$160,000. It's a pretty substantial
Yeah,
cost.
and I think, I mean,
That
no
sound
more
about
than
right, Marcel?
120 budgeted for that.
The experience study, I believe, I don't think it was quite that high, Mark. I want to say 126 for some reason is sticking in my head. But the experience study was part of the contract with Chiron, and we only pay for what is in the budget, for what was in the contract for that. So whether they spent more money on it or not doesn't impact us. That impacts them. So it was budgeted for what it was in the contract. My recollection is it was split over 2 fiscal years, and maybe the split didn't happen quite the way it should have, but the experience study was budgeted for what it was in the contract, and that is what we paid Chiron for it.
Maybe it'd be a good idea if we asked Ted to come back, because I'm not sure we've got a good explanation for that $55,000 overage.
No, we're happy to do that.
Sure.
Yes. So,
Maybe tomorrow we could just have a,
but I did want to add one more thing in advance of getting the numbers there. The amount that we pay to Chiron, half or 2/3 of it is on retainer. It's a fixed amount. But a substantial amount is an hourly-based, non-retainer fee we pay them based upon what we ask them to do. So we just make guesstimates at the beginning of the year on how much non-retainer hourly work we're going to do. So that's really where the variance should be. I
Correct.
just don't know what it is offhand.
go ahead.
I'm sorry. Go ahead, Val.
No, you're up.
And so when the city makes requests that require the actuary to do work,
That gets
how is that accounted for and budgeted? Because don't we send them a bill for that as well?
We do.
Correct. So what ends up happening, at least when we get the bills, is that we'll get them coded, because I think, basically they'll go to Marcel and Mark first, and then we'll get instructions on how to deal with that expense. But what we try to do is we don't try to offset any receipt directly against that expense, because I want to see what the full unadjusted expense is for that item. But you are correct, it is something that would be charged completely to the plan sponsor.
So that could be reflected in this $505,000 number.
Absolutely. As Mark pointed out, there are individual charges. So normally what happens is that we have a contract with retainer amounts. I had a $1 placeholder for the experience study. I had flat retainer fees. And then what we do is we estimate for what we think will occur in that coming fiscal year for additional actuary expenses.
And since we're picking on the actuary, we can pick on the lawyers too. The legal fees for private equity and real estate are 42% over budget as well. Do we know what the reasoning for that was?
Based upon subjects Liza's talked about, it's usually related to some form of negotiation or agreement with an investment fund. For instance, like as I pointed out, our private equity fees were higher because of an investment in a new series. And consequently, anytime they're doing any type of agreement like that, they are getting legal counsel's, investment legal counsel's opinion on that information.
We'll get more information for you on that too.
And disability processing, why is it 50% of what we had expected?
So, once again, that is not something that is subject to, I'll say, 100% accurate forecasting. It depends on the actual cases themselves and how they actually go about processing. They're making an educated guess and managing their budget, but where we are is where we are with an actual expense processing standpoint. We ask, and it's just the same general information that I get. We didn't have as much expenses because either A, our applications were down, or the timing of those expenses were not incurred at this point in time.
This includes outside adjudicator fees.
That's exactly what that is.
And
That's what
if you don't send as many cases to an outside adjudicator, you're going to run under, so.
Okay. And then help me with one last thing, Ted. On the $240,000 that's on the capital expenditures,
Yes.
for which we got the grant money, is that fixed asset on our books?
Yes. So it's a capitalization of both a grant revenue sitting in other income, because we're not really set up for, grants. We're a pension system. So it's a capitalization of income, recognition of income and a recognition of a fixed asset that will be depreciated over time.
Okay, but what I'm getting to, that depreciation, then it gets billed to the city as part of our expenses. Aren't we double dipping? Because we got the grant money, and now we're going to bill the city for it again.
I'm going to have to think about that one, because you're right, it will be charged periodically through depreciation expenses and to all the plan sponsors. But the idea is that we got something where we didn't have to pay for it, so we had to record it. And so consequently, the recognition is proper with the grant, but I'm going to think about the periodic charges to expense and their effect on the plan sponsor. I have to recognize that there's no doubt about that. It will be depreciated over time, but I'm not doing, tax versus audit.
Maybe we could use that to pay for the interest on these overpayments.
Second.
Yeah.
It is important to pay attention to every little thing, I guess, when you put it all in that perspective.
Yep, that's a good question.
Can we move on then to item 8?
Sure. This one, I will just basically open up to questions. These are unaudited financial statements. This is really just the 1 month's activity without regard for the fair value adjustment that I told you as of June 30th. So if State Street recorded anything in July, it will get moved back, pending the completion of the audit. And with that, I will open up the floor to any questions you may have on those financial statements.
There don't appear to be any questions on that. Thank you very much, Ted.
Thank you.
That leads us to questions and comments from chair, trustees, and staff. Hearing none. Any non-docket items? All right. In that case, the meeting stands adjourned at 11:30.